Good afternoon, everyone. Welcome to our fall town hall. My name is Dominique Velger. I am Community Engagement Specialist, and we're so happy to have you here today. So before we get started, we have a few house rules, and one of them is that we're going to be answering all of your questions in our Q&A section. So definitely put your questions in there, and we are reducing all of the background noises. And if you miss any portion of this presentation, it's being recorded so you can catch it on our YouTube channel at HUECU. And of course, some lucky people who are on this amazing town hall, we're going to have some prizes for you. So we are automatically entered. So when I send you the email, it's not spam, I promise. So you can respond back to me and I'll send you your prizes. I really appreciate it. All right, so we're going to get started. But before I do that, I have some great news. Next Wednesday, we have a new branch opening at the Longwood Medical Area, otherwise known as LMA. So if you're in the area, just stop by, say hello, meet some of us in person. I know you've seen us a lot in the Zoom calls and these Zoom presentations. So come on by. It's going to be a great celebration. We're so excited to be back at LMA. And without further ado, I'd like to introduce you to Craig Leonard. He's our president and CEO. He'll be answering a lot of your questions. So I'll go off camera and I'll ask the questions and he'll answer them for you. So these are questions a lot of our members sent to us prior to this. And we also have the live Q&A. Don't forget, use that. So he'll answer other questions that you probably have that are not presented here today. Hello there, Craig.
Hey, Dominique, how are you?
I'm good. Well, the first one is HUCU's financials. So let's talk about that.
Sure. So we started doing this last town hall meeting is just to try to give you an update on what's happening here at the credit union in terms of how we're doing financially. And we're having another really good year in terms of our overall asset growth. In fact, this may be our 7th consecutive year of double-digit asset growth. We're certainly on pace for doing so. But we've definitely seen some noticeable differences this year versus last year. A lot of that has had to do with the economic climate. You know, it's no surprise to anyone out there that we've seen a lot of increases by the Federal Reserve, this bank, in terms of increasing interest rates. And that's impacted a lot of our members and it's impacted our financials as well. So we have definitely seen a slowdown in mortgage applications as interest rates have increased. We've also seen a dramatically difference in what those applications are like when they come through the door, in that a lot of people are now opting for a hybrid adjustable rate mortgage versus a fixed rate mortgage because of the cost impact. The other thing that we've seen dramatically increase this year with the increase in interest rates is a shift that a lot of our members are taking out second mortgages, whether it's a fixed second mortgage or it's a home equity line of credit. And no surprise there, we've seen lots of people refinance their first mortgages over the last few years. And they certainly don't want to do that now with the rates escalating, but they still, you know, we all have our kind of pet projects at home that we want to tackle. So taking on, tapping into some existing equity within a person's home still makes a lot of sense. And those kind of second mortgage products are great vehicles to do so. We're also watching a lot in terms of what's happening with the consumer and consumer spending. We've seen a real escalation in consumer spend through the first half of the year. We've started to see that moderate. You know, that's part of what the Federal Reserve is trying to do, is to, I hate to say it, but they're trying to make life hard for everyone here. And we're starting to see that a little bit with that kind of moderation in consumer spend. And then, you know, from a deposit standpoint or a savings standpoint, we're certainly seeing members start to take advantage or ask a lot more about earning more money within savings accounts. We've been trying to be as proactive as we can in terms of increasing rates. And we're certainly seeing a lot of members take advantage of that. And lastly, you know, the overall earnings of the institution continue to be really strong. That being said, we do kind of forecast our earnings to be off for about 5% from where they were last year, but strong nonetheless. So overall, that's a quick glance of what we look like right now.
All right, thank you, Craig. Another question, we have actually members are answering, in the Q&A, they're letting us know they've been a member since 1998. Other one is for 15 years, so this is really good. Um, One of the questions they have is, what are your thoughts on rate of inflation and current interest rate environment?
Yeah, it's tough. No one's happy with the rate of inflation, certainly not the Federal Reserve. And you go to the grocery store, or open up utility bills, or put gas in your car, and we all feel the same type of pain from the rate of inflation. It's things cost a whole lot more out there these days. And so the Federal Reserve recognizes that, and they have made it their goal, and it is part of their goal in terms of why they've been created out there to kind of create some price stability. So they've been out there aggressively increasing interest rates. The consumer has been spending a lot this year on the heels of the pandemic, and when things have opened up, a lot of money flowed into the banking system over the last couple of years. And then those monies are now kind of being spent on things that they just couldn't take advantage of the last couple of years. And it's not just an issue here within the United States, but around the globe. There's many countries that are being impacted by inflation. So it's really something that's happening at a global level. The current interest rate climate, the Federal Reserve, like I said, they have now increased rates 6 times this year. And the last 4, last actually being this week, have been at increments of 3/4 of a point. So they have increased rates in total this year 3.5%, which is considerable. You'd have to go back really to probably the 1980s to see the Federal Reserve increase rates of this magnitude in such a short time horizon. And they're not done. They still feel like they're going to continue to fight this battle. So it's not over for sure.
Ah, yes, it is. It's quite a battle. All right, our next question. Do you think the Fed will continue to increase interest rates?
Yeah,
I'm
so
keeping my fingers crossed.
well, you know what? Like I said, they just increased rates this week for the 6th consecutive time here in 2022, and they came out with some language to say essentially we're not done. What they did say is that we may not increase to the magnitude that they did over the last 4 increases. So like I said, the last 4 were at 3/4 of a point in each of those. So now the markets are starting to think that the next rate increase, which is likely to come in December, will be more in that 0.5% range. And again, their mission right now, and they've been very open and vocal about this, is that they're going to create some pain for the consumer. They're going to create some pain for businesses. They need to create an environment where consumers aren't spending to the magnitude that they are today, so it can really just push down demand and get inflation back down to a level really where they want it to be, which is really closer to that 2% level. And if you look at where inflation is kind of trending right now, it's around 8%. So they've got some work to do, and they also realize too that there generally is a lag effect to when they make a move and to when that impact kind of flows through the system. So they are watching that closely.
All right. Next one, will HUECU's rates on savings accounts improve, and by how much?
Yeah, it's finally starting to be a better day for a saver. For the last decade, I would say that savings have been tough because we've been in such a low rate interest rate environment. Over that past decade, it has been a phenomenal time to borrow, but really a bad time to save. And we're starting to see that shift now because of the changes in the interest rate climate. It's now been much more challenging on the borrowing side, but you're starting to see more and more savings accounts increase. And we've tried to be aggressive in some of our different deposit accounts. And we generally have focused most of our efforts with certificates of deposits. you'll hear people just say CDs for to shorten that. And we've been focusing our efforts within kind of that 11 and 15-month term. It generally is a time period in which most members feel comfortable going out to. Generally speaking, members don't like to tie up their money for long periods of time. So that's really where we've been focusing our energies, and it's kind of where we feel like we can get the best return back to our members. What we do is we survey the kind of the competitive landscape on a weekly basis. So we're looking at it regularly. And our goal as an institution is to provide good value back to our members. And this is one way that we can do it. I mentioned that we've been increasing CD rates, but we also recently increased our money market rates. And we'll continue to look at those and continue to make adjustments. Normally, when the Fed makes a move, we tend to follow in a relatively quick fashion to those moves by adjusting our rates. I can't really talk about how much we'll make those moves. Sometimes that is largely based upon kind of the competitive landscape and the rate of the impact that the Fed is doing with their movements.
All right. Our next question, as interest rates climb, what will HUECU offer in the form of home improvement loans?
Yeah, so when I was talking about our financials, one of the fastest growing parts of our loan portfolio this past year have been second mortgages or home equity lines of credit. And it's really been for people to do home improvements. And we offer really 3 different types of products that a member can take advantage of. The home equity line of credit is one where it's typically a variable rate loan that's tied to prime. You can do a fixed rate second mortgage. Again, the rate is just fixed over that duration. And then we actually have an unsecured type of personal loan that people can take advantage. That's pretty good if you aren't looking to take out a lot of money and you might not have a lot of equity built up in your home to tap into. One of the things that we've been trying to do over this past year, understanding that, again, people don't want to refinance that first mortgage because most people have done so over the last few years and really secured a low rate, is by offering a fairly aggressive home equity line of credit. So what we've done and are continuing to do is to lock in that rate at a much discounted price versus the market, at least for the first year. So as an example, I'm going to call it our HELOC loan just for short. Our HELOC loan today is just under 4%. It's actually at 3.99. We lock that rate in for a year so a consumer or member can really take advantage of that lower rate, particularly for that first year, and kind of use that for home improvement.
All right, I wanted to remind everyone, we have the information for you about home loan experts in the chat, as well as rates and savings. That's all those information you can see it in the chat. All right, the next question. What investing advice would you give to someone retiring in 6 to 7 years?
Yeah, the markets have been all over the place this past year, bouncing around like crazy. The first thing I will say is that I'm not a licensed investment advisor. So legally, I can't give investment advice. What I will say, as a generally speaking, as you start to get closer to retirement, you should always be reevaluating your risk tolerance. Typically, as you get closer, you want to be less risky because you don't want to put your portfolio at large risk to market swings. The one thing that I will say is that, we have received a lot of comments over the years from our members in terms of offering investment advice. And I had mentioned at the last town hall, this was something very much on our roadmap. We are in fact going to roll out a new investment service program in the first quarter of 2023. Over the last few months, we've been evaluating different partners. We've secured a partner. We're actually in the implementation phase, which includes also kind of recruiting for some investment advisors. So when that time comes, I think whoever may have asked this question I would recommend that you make an appointment with one of our advisors. They will certainly be better equipped to answer a question like this and help really any of our members. That's really what this program is going to be designed for. Whether you have whether you're an existing investor and you want some advice on how your plan is performing, if you're someone who is new and just thinking about getting into investing, this would be something very much that you could talk to an advisor and create a plan. So whether it's the creation of a plan or the reevaluation of a plan, or modifying a plan, we really think that this is going to be a valuable service to our membership.
Great, awesome. Our next question, will HUECU follow the trends of institutions removing common fees?
You know, there's been some press over the last, I would say, year in particular, where some institutions have started to remove some fees. We have never been an organization that has used member fees or penalty fees as part of our strategy. It's not who we are. It's not who we ever want to be. And so we have tried to design products that are absent fees, really. You know, and a good example of this are two checking accounts that we designed and brought to market a year ago, which also happen to be the most widely accepted new checking products that we have from our members. And one is a cashback checking account, and the other one is a premium interest checking account. So kind of back to the person who asked about higher savings rate, a premium checking account is another great product that you might want to take a look at, because the rate of return on that is 2%, which is really strong in this market. But in terms of fees, the way we've designed both of these products allows you to engage differently with the organization in order to get that cash back, in order to get that premium. But there's no maintenance fees. There's no monthly fees that are assessed. We really didn't want to do that in our design, and we are looking to avoid fees when we can. That being said, we also do evaluate all of our fees on a regular basis to make sure that they're priced appropriately, but more importantly, that they're providing value back to the members. And so we do that on a regular basis.
All right, we have about 13 minutes left. We have a few more questions. Please keep putting your questions in the Q&A section, and then we will also answer those questions live for you at the end. Craig, how is HUECU helping members become first-time home buyers?
I would say the first thing that we're doing is we really start with education. And we do a lot of different first-time home buyer sessions. Our website is filled with tremendous amounts of valuable information for first-time home buyers, because, you know, I was a first-time home buyer years and years ago, and it can be a really confusing time and a confusing experience. You know, I do it every day, so I understand the business, but for those who are just kind of starting out, you need some guidance, and we understand that. And so we try to lead by education. Our mortgage loan officers are a terrific resource to for those who are first-time home buyers, to explain the process, to perhaps get pre-qualified so they understand how much they can afford. The other things that we do for our first home buyers is that we discount the pricing on the rate. We discount that 1/8%. We also discount the cost associated with closing on that transaction. So again, we understand that this is a big decision for consumers, right? For our members. And so we try to help them the best we can in terms of education, the cost on the rate itself, and then the closing cost.
Right. Our next question, will HUECU be offering any special incentives for solar system financing?
And we've had a solar system loan out for a few years, being a green company is important to us. Um, for the member that may have asked this question, and for other members interested, I'd refer you back to our website where there's a lot of information. If you go under our specialty loans, you'll see a whole section there dedicated to solar financing. We don't have a specific special rate, I would say, for that, but within that information that's on our page, there's lots of information out there in terms of both federal and state tax rebates that are available to consumers or members, as well as incentives that you can get back from the utility companies themselves. So I would really highly encourage you to take a look at that site. What we do see from a lot of our members too, that they might not take advantage of our specific solar loan financing, which is a personal loan. Many of them opt to do it through a home equity loan. And so in many instances, they might be saying, you know what, I've got to replace the roof because it's 20 years old, and I want to do solar at the same time. So I combine those. And so a number of our members have used a home equity loan, whether it's variable or fixed, to assist them with their solar financing needs.
All right, I wanted to remind everyone, keep putting those questions or any comments or suggestions for Craig in the Q&A section, and we'll definitely be happy to answer them at the end. And last but not least, HUECU's upcoming initiatives. That's a big one for you, Craig.
Yeah, this is fantastic. This is where I can kind of give some insight on what's going on within the organization. So the biggest thing, and Dominique started off the call with it, is our new branch that's opening next week. We're really excited about this. You know, we left our other Longwood location earlier this year, and actually we really hadn't had access to it since the pandemic, and that was disappointing for us, and I know disappointing for a lot of our members. We're thrilled that we were able to find this new location, and we can't wait to open this and to the entire kind of Longwood area next week. So that's one. The other two that I wanted to kind of just bring to your attention, one has to do with insurance products. So we continue to evaluate and listen to our members, and that's why these town hall sessions are so valuable to us as an organization, is getting your feedback on what we should be thinking about in the future. And a couple of those items that have come through over the years are in regards to insurance, and is in regard to investment services. Now, I touched upon the investment services a little earlier in the call. Like I said, that's likely to come into be introduced to the membership in the first quarter of 2023. Again, we're super excited for that one. And then the second one is insurance. So we feel like we can offer our members with discounted insurance pricing, whether it's for their home, their auto, for your pets, renters insurance. It's, you know, we have a lot of our members who rent here around the city. So you'll be learning more about that at the beginning of the year. A few other things that are kind of on our roadmap. Earlier this year, actually, we've been doing a lot of enhancements within the digital part of our sites. You can now communicate through us online, through our chat bots, through live chat, through on-screen voice. We can help you through co-browsing, and we've developed a program where they can all be integrated to provide you a better digital experience. So regardless of how you kind of connect with us, we want that to be the best experience for you. And as part of that commitment, you know, next year we're continuing to look in the back office of how we can continuously improve or remove friction with how we interact with you and how you interact with us. You know, I've said for now a few years, life is stressful for all of us, right? And the way that you interact with us as an organization shouldn't be. And so we're committed to trying to remove friction throughout all the different interactions that we have with our members. So that'll be incredibly important to us. And lastly, we're continuing to evaluate our mortgage offerings. Kind of goes back a little bit to the question around first-time home buyers. We want to make sure that we're offering a full array of products that will meet the needs of our members. So we're going to take a step back. We're going to make sure that we're looking at our current lineup, making sure that's the right product offering, and any gaps in there, we're committed to exploring and implementing.
All right, everyone, keep those questions coming. We have about 5 minutes left. Let me see what is in the Q&A section. All right, someone said, what is the walking distance between the new branch location from the old location?
Oh boy, I might need some help from maybe Tom Montilli. So it might be, oh man, depending
It's
on
not that far.
depending on how fast you walk, and I'm a fast
Yeah,
walker, I
me
probably
too.
can do it in under 10 minutes.
Yeah. And it's on at 435 Brookline Avenue, right below Jocelyn Place, Jocelyn Diabetes.
Right.
It's right at the corner, so you can't miss it.
No, and it's a fantastic location because it's a street front location, great visibility. It's not within another building, which our other location was.
Right.
Have an ATM accessible right there. So I'm hoping when you see it, you won't miss it.
I calculated it quickly here on Google Maps, and it has it at exactly a half a mile, and it's about a 9-minute walk according to Google.
Okay.
But you walk fast, Tom. We're
Tom's one of
fast
the
walkers,
fastest.
me and
Yeah,
you and Craig.
Tom is one of the fastest walkers I've been. Walking with him is pretty much like it's running pretty much. So Tom, you
Yes,
could do it in
me
5
and
minutes.
Daya. All right, we have a few more minutes. Everyone, put some questions in there that you want for Craig to comment or answer for you. We have about 3 more minutes left. Just keep those questions coming in. Let me check one more time. I don't see any questions.
Okay.
So any last words, Tom? Or Craig, anyone?
I would just say again, thank you for your membership.
Yes.
These sessions, like I said, are incredibly important. We create product, we create service through these town halls. So keep the questions coming. We try to be a very transparent organization. I'll leave with my email address if you ever want to email me something after the fact. Certainly do. That's who we are as an organization. It's just Craig_Leonard at harvard.edu. So if you want to tell us something that we're doing well, I would love to hear it. But if you think there's room for improvement, I want to hear that too. Okay, so thank you again so much for your membership, and hopefully we'll see you at one of our branches or our new branch next week.
All right, thank you so much, Craig. And if you missed his email, it's in the chat, so you can email him. He will definitely answer you back. So look forward to those emails. And of course, everyone, please stay in touch with us. Join us on all of our social media handles from Facebook, Instagram, Twitter, and YouTube at HUECU. And you can email us and visit us at our new location. I can't wait to see you. And that is opening next Wednesday. So come on by and say hi to all of us. And thank you so much for joining us this afternoon. Have a great afternoon. It is a beautiful day outside. Take care. Have a great weekend.